You've probably seen the headline, Social Security is now tax-free. Maybe you've even gotten an email from the Social Security Administration saying most seniors won't pay tax on their benefits anymore. So here's the honest answer to the question that I'm getting almost every week. Did the 2025 tax law actually make Social Security tax-free? Well, not quite. And the gap between what people think happened and what actually happened can cost you real money at tax time. So let's clear it up in plain English. Here's the story that spread. In the summer of 2025, a large tax law passed. You'll see it called the One Big Beautiful Bill Act. Right after it, a lot of people got the impression that taxes on Social Security were gone. The headlines said it, social media ran with it, and even an email from the Social Security Administration said something close to 9 out of 10 seniors would no longer pay federal income tax on their benefits. So millions of people now believe their Social Security check is completely off the hook at tax time. And I understand why. If that's what you took away, you're in good company. But it's worth slowing down on because the truth is more useful than the headline. Here's the part that actually matters. The law did not change how Social Security benefits are taxed. The rules for whether your benefits get taxed and how much are the same as they were before. What the law actually created is a separate temporary tax deduction for people 65 and older. It's a real benefit for some people, but it isn't the same as Social Security becoming tax-free. Those are two very different statements, and mixing them up is where people get tripped up. Think of it as two separate buckets. Your Social Security taxing rules are one bucket, and this new deduction is a second separate bucket. The new law added something to the second bucket and left the first one completely alone. So what did you actually get? Starting with the 2025 tax year, if you're age 65 or older, you can take an extra deduction of up to $6,000 per person. A married couple where both spouses are 65 or older can get up to $12,000 deduction between them. This is on top of the standard deduction and the extra amount seniors already got, so it's a genuine addition. And here's a key point. It's a deduction against your taxable income overall. It's not carved out of your Social Security specifically. For some retirees, especially middle income folks, this is enough to cancel out the tax they would have owed on their benefits. That's where the tax-free idea comes from. But that's a result for some, not a new rule for everyone. Now, here's where I want to save you from a surprise, because this deduction comes with four strings attached and they matter. The first one is the big one for a lot of you watching. You have to be 65 or older. If you're in your late 50s or early 60s and not yet 65, this deduction does nothing for you right now. And the headlines skip that part. Second, it's temporary. As the law is written right now, it runs through the 2028 tax year, and then it's scheduled to go away unless Congress extends it. So planning around it has a shelf life. Third, it phases out at higher incomes. The full deduction starts shrinking once your income passes $75,000 if you're single, or $150,000 if you're a married couple. And it disappears entirely a little bit above that. So higher income retirees may get a reduced amount or nothing at all. And fourth, if you're married, you have to file jointly to get it. Married filing separately does not qualify. Since the taxing rule didn't change, let's actually understand it because most people have never had it explained simply. Whether your benefits get taxed comes down to one number the IRS calls your combined income. And don't let that term scare you. It's just any other income plus any tax-free interest plus half of your Social Security. Add those numbers up and you get one number. Then there are two lines in the sand. If that one number is low, none of your Social Security is taxed. If it's in the middle, up to half of your benefit can be taxed. And if it's higher, up to 85% of your benefit can be taxed. Now, notice that ceiling. The most that ever gets taxed is 85% of your benefit. It's never 100%. So some of your Social Security is always shielded. One more thing worth noting, those dollar lines haven't moved since the 80s. They don't adjust for inflation. So over time, more people drift into paying some tax on their benefits. That's not new, but it's part of why this question keeps coming up. So let's make this real. Let me put the two buckets together with a simple example. Now, this is a hypothetical and your own numbers will look different, but it shows how the pieces fit. Meet Dave and Carol. They're both 66, they're retired, and they file jointly. Between a pension and some withdrawals from savings, they have about $60,000 of income for the year, and they collect about $30,000 a year in Social Security. When we run that combined math, they land above the top line. So up to 85% of their benefit can be taxed. That's the rule that didn't change. Now, here's where the new deduction comes in. Because both Dave and Carol are over 65 and their income is under that $150,000 phase out, they qualify for the full $12,000 deduction, $6,000 each. And that comes right off the income that they're taxed on. For a couple sitting where they are, that can offset much or even all of the tax they'd have owed on their benefits this year. Same Social Security, same taxing rules, but a lower bill because of the second bucket. And notice what makes it work. It's their age and their income. Change either one and the picture changes. So who actually comes out ahead here? Let's be fair about it because this isn't nothing. The people who benefit most are middle and upper middle income retirees who are 65 or older, the folks who were paying some taxes on their benefits already but weren't high earners. For many of them, this deduction meaningfully lowers or even zeroes out that tax bill for the next few years. Who doesn't get much? Well, two groups. If your income is already low enough that you weren't paying taxes on your benefits in the first place, an extra deduction does nothing for you. And if your income is high, the phase out shrinks or removes it completely. So the headline that everyone's Social Security is now tax free just doesn't hold up. It depends entirely on your age and your income. Now, if you're still a few years from 65, you might be thinking this one isn't for you yet. But here's why it's worth your attention now. There's a window, 2025 through 2028, where this deduction exists. And the years right before and right after you start Social Security are when your choices about which accounts to draw from and when have the biggest effect on the combined income number we talked about. That number is what decides how much of your benefits get taxed. Now, I can't and I'm not going to give you a one size fits all move right now because the right answer honestly depends on your accounts, your other income, and your timeline. But this is the exact kind of thing worth mapping out before you flip the switch on Social Security, not after when your options are narrower. So here's the bottom line. Social Security did not suddenly become tax-free. What changed is that people 65 and older got a new temporary deduction that can lower their tax bill, sometimes all the way to zero, and sometimes not at all, depending on their age and income. The rules for taxing the benefits themselves didn't budge, and knowing that difference is what keeps you from a nasty surprise when you file. Now, every situation is different. Your age, your income, which accounts you're pulling from, all of it changes how much of your Social Security ends up getting taxed. So if you'd like to see what this looks like for your own numbers, that's the exact kind of thing I help clients navigate throughout retirement. Reach out and we can run yours. I'm Zach Pagano with the Genesis Group, and if this cleared things up, please consider subscribing because I'm working through the questions people are getting wrong about retirement. Thanks for watching.